Okay, so maybe we can start. Who joined with the name participant?
I think Gaurav, it is me, Rohit.
Rohit. Okay, okay, Rohit.
I don't know why it is showing participant.
No, no problem. Maybe
Okay.
yeah, it's taking by default or something. No problem.
Okay.
Okay, so I think there are still some guys who are not joined, but we will not wait. Already we are delayed by 10 minutes. Okay, so just a quick recap of what we have done in our last session, and then we will proceed from there. Okay, so if you remember, we talked about 4 different scenarios during the revenue recognition. Okay, the first scenario is straightforward. When you create a billing document, system should be able to recognize the revenue then and there itself, which means there is no revenue recognition setting required for this first scenario. No, sorry, not for the first scenario, the fourth scenario, right? Which means the revenue will be booked at the time of billing. And then we discussed about these 3 scenarios where the revenue recognition is not done at the time of billing. So either the billing is done first or the revenue recognition is done first. So whenever we are doing the billing first and then the revenue recognition, the amount will go to deferred revenue, because till the time that revenue is not recognized, it will go and sit in this particular GL account, deferred revenue account. Okay, and the 2 scenarios which are applicable for deferred revenue is, one is with billing cycle and second is without billing cycle. When we say without billing cycle, there is only one billing created. Okay, only the single bill will be created at the beginning of the contract. Okay, so let's say for example, you have a contract which is valid for 1 year. At the beginning of the year itself, your billing will be created. Okay, and the entire amount of 1 year will go and sit into deferred revenue account. And every period end, you will execute the revenue recognition transaction using transaction code VF44. And what will happen is that particular amount which is sitting in the deferred revenue, the calculation will be done for a particular period, and that amount will be uh, transferred from deferred revenue to actual revenue account. Okay, so every monthly same amount, which means divided by 12, will go from deferred revenue and it will sit into the actual revenue account. So at the end of the year, your deferred revenue account will become 0, and whatever amount was booked under deferred revenue will be transferred completely to the actual revenue account at the end of the contract. Okay, and second is with billing cycle, which means there is no single billing. Billing is also happening, let's say, every quarterly or even every monthly. Okay, so in that case, what will happen? Let's take example of quarterly. We have seen this example of this contract, which is billed quarterly, which means your contract is valid for 1 year, but you are not creating the entire billing at once. You are doing the billing in 4 different quarters. Okay, and at the beginning of each quarter, which means today if I'm starting the contract, my first billing will be created for next 3 months. Okay, and what will happen in that case? The deferred revenue will be booked only for next 3 months, not for entire 12 months. Because again after 3 months, we will create another billing, third quarter again the third billing, and fourth quarter again the fourth billing. So that is the concept of billing cycle, where again the deferred revenue will come into the picture, but deferred revenue will be only for the part for which the billing is already created. Okay, so we've seen this examples practically in the system. We have seen these contracts, how they are created, what are the different fields which are important in the contract, and we were not able to complete this particular scenario in our last session. So I'll talk about this scenario first, And then there is, as I told you, there are more scenarios which I'll keep on adding here so that to keep a track of what exactly we need to understand in SAP RAR. Okay, so let's proceed with this scenario now. Okay, which is scenario number 3. Let me copy this contract which are already created in the system. I will copy this and go to VA43, which means the display contract transaction code. Okay, so this is our contract and we can see this is the item within the contract which is using WVN as the item category. If you remember last session we discussed about this item category. Okay, and how this item category gets determined, it is getting determined based on the sales order type, which is SC here, and the item category group, which is mentioned in this material master. Okay, so based on the combination of order type and item category group maintained in the service master data, system will pick what will be the corresponding item category, and this combination is defined in the configuration. Okay, so once the item category has been determined, based on this item category, system is going to behave. So if you see here, this item category WVN is relevant for billing plan. Okay, and you can see this is the same example where the billing is done every quarterly. So total sales value of this contract is 1200. Okay, which will be definitely divided into 12 parts, so 100 per month. But the billing, we are not doing entire billing of 1200 at once. We are dividing this billing into quarterly bills. And the only difference, if I open VA43 again here, and if I go with this billing cycle, which we already seen. Okay, this is also using WVN. If I double click on this, this is also having the billing plan. But what is the difference here is, if you compare this to, you can see the start date and end date. So what is happening is, for the period from 1st of July 2012 to 30th of September 2012, which means 3 months, the billing is done at the end of this quarter. Okay, in this contract there are 4 billings, but the billing is done at the end of every quarter, not at the beginning of every quarter. If you see this, for the period of 1st July 2012 to 30th September 2012, what is happening is the billing is done at the beginning of the contract, beginning of the quarter, sorry. Okay, so when the billing is done first, what will happen? Whenever you do the billing first, it will get booked as deferred revenue, right? When you do the billing first, the amount and go and sit into the deferred revenue account. But whenever you do the revenue recognition first, because if you see this example, what is going to happen here? At the end of first month, at the end of July, that is 31st of July 2012, whenever a revenue recognition will be booked, this will be actual revenue. So revenue account will be credited. What will be debited? Because we have still not created the billing document. Billing document will be only created at the end of the quarter. That is the reason there will be new account called as unbilled receivables account, which will come into the picture. Okay, so that is the reason. If you see this, what is happening is unbilled receivable accounts is coming into the picture because we are doing the billing only at the quarter end. Okay, so what will happen? We have the accounting entries also here. Let me see which one. have you written here? So scenario 1 is billing. Billing is done in advance. Billing is done at the end of the contract, but revenue is recognized at the end of every period. So you can see this example. What is happening is revenue is getting recognized at the end of the month, but what is happening here is it is going into the unbilled receivables. Why? Because the actual billing will be done later, and whenever the billing will be done, then actual customer account will be debited, and whatever amount was collected in unbilled receivables, that will get credited. So ultimately, irrespective of whether you are using a deferred revenue account or you are using the unbilled receivable account, at the end of the contract, you will find all these amounts are getting nullified, and actual accounting entry which will still remain is your revenue account will be credited and your customer account will be debited.
Hey, Gaurav, one question.
Yes.
This unbilled receivable is the RAR terminology, or it is old SD revenue recognition terminology?
Okay, see Naren, what we are following is, this is just our third session, right? And
Okay.
yeah, and what I'm going to do here is, I'm still not talking anything about SAP RAR. I'm
Oh,
just
sorry.
creating the,
Sorry.
no
Sorry.
problem. No problem, just for your information. So we are just creating the ground of understanding why SAP RAR is required at first place. So we are like almost reached there. We already seen what kind of scenarios can come in the real environment. We have seen these are the different scenarios and how they were handled in SAP ECC and using the current SD revenue recognition functionality. Now coming to your question, whether this terminology of unbilled receivable and deferred revenue is a terminology.
I got it. I was under the wrong information. This is my first session, so
No problem. No
I
problem.
was.
So yeah, just to answer your question,
I have
this
a question
terminology. Yeah, just 1 minute. This terminology, what we are talking about, unbilled receivable and deferred revenue, this is applicable to both. So even if you go to RAR also, still there will be unbilled receivables till the time you are not billing to the customer.
Okay.
Yes, Ramakrishna, go ahead with your question.
Yeah. So my question is, how are we deciding that the billing happens at the beginning of the month or end of the month? Is it just a manual record that we maintain, or is there any config that we can do for this beginning of the month, end of the month?
Yes, I'm coming to it. Okay. So if you see, basically the item category that we are using is same, right? We are using this WVN in both the cases. Okay, but if you see this, periodic billing is okay, but this option, if you see Z3 and Z4, this is the only difference, and definitely this is coming from the configuration, right? So what is happening is, whenever we are saying Z3, it means this is the quarterly billing, obviously, but it is done at the end of the month, or you can say at the end of the quarter, right? If I show you the list of available options here, there is some background noise. Thank you. So if you see this list of available options, you can create the monthly billing, which means monthly at the end of the month, monthly at the first of the month. Only monthly means by default it will go to the first of the month. Yearly at the first of the year, quarterly, end of the month, which we are using here, Z3, and Z4, which is beginning of the month. So what is happening is, based on what you define here, system is calculating what will be the billing date and then the appropriate amount. Okay,
so
and
this Z3 is assigned to the item category?
Z3 is not assigned to the item category. By default, either Z3 or Z4 is assigned to the item category, but yes, whenever you are creating the contract, you have the option to change this. Or maybe you can create 2 copies of item category, one with Z, let's say WV1, and second ZWV2, which means V1 will be defaulted to Z3 and V2 will be defaulted to Z4. But this is something which is done manually in this contract.
Okay.
But yes, it is possible to derive it automatically.
So for that, I need to assign this to the item category. Is that right?
Yes, correct. For this, you need to assign it to the item category. What exactly you want to assign?
Yeah. Can you show us where to do it?
Yes. as I'll show you. Okay, so what is happening here is, since we are saying that we are going to go with this quarterly billing at the end of the month, that is the reason even if you see this indicator, this is not ticked. In advance means for the quarter, you are going to bill at the beginning of the quarter, which means in advance. All the billing document that you are creating is for the entire quarter, but it is in advance. Okay, so if you see here, this is ticked. Okay, so this option of determining the billing plan type and this when exactly you are going to billing, it is defined at the item category level. Okay, and based on that, system will define when the billing has to be carried out. Okay, and the amount is, you can see it is a proportionate amount. Okay, so only in case when you are doing the billing later and you are recognizing the revenue first, in that case only this unbilled receivable accounts will come into the picture. Unbilled receivable accounts will not come into the picture when you are already doing the billing. In that case, deferred revenue. So if you ask me the question for a particular item in the contract, is there any possibility of, or is there any scenario in which both deferred revenue and unbilled receivable will come into the picture? The answer would be no. In a particular item, either the deferred revenue will come or unbilled receivable. And the answer is also very simple. If you are doing the billing before revenue recognition, in that case, only deferred revenue will come into the picture. If you are doing billing after the revenue recognition, then definitely unbilled receivables will come into the picture. Deferred revenue will not come. Okay, and I already shown you where exactly these accounts are maintained. Maybe I'll just go through once again with the configuration that we discussed. So let me go to SPRO. Okay, so there are some questions on the chat screen from Rohit. Let me talk about that. Yeah, Rohit is asking, can I give some other date instead of first for billing? And second question is, can I change the date of billing once given? See, whenever you are creating the contract, there is an option. By default, system will propose something. But if you are not happy with that proposal, definitely you can go and change according to your requirements. Okay, so based on what you are defining there, system will calculate the amount. Okay, so it may happen that your dates are different, and based on that date, system will calculate how much amount should be billed and how much amount should be recognized. Okay, so let me show you here in IMG. So all the settings relevant to SD revenue recognition will come under sales and distribution, basic functions, and you have this account assignment and costing. Here there is a separate folder for revenue recognition. So the first one is set revenue recognition for item category, where you specify at the item category level whether it is relevant for revenue recognition functionality or not. So if I go for WVN, and if you double click here, so you can see this is related to revenue recognition functionality, and it is related to time-based revenue recognition. If you remember, I told you there is time-based, time-related revenue recognition, and then there is second one, which is service-related revenue recognition. So the next scenario that we are going to talk about, the fifth scenario, we will be able to understand what is service-related revenue recognition. Okay, and this is from where the system is identifying the start date. Okay, so from which date your contract should be started. So you can see one is not relevant. Obviously, if this item category is not relevant for revenue recognition, if this is blank, this will be also blank. Second is proposal based on contract start date. So the billing plan or the revenue recognition will start from the start of the contract date. Okay, if you go with this A option, this means whatever is your contract start date, your revenue recognition will start from that particular date. And second, B1 is proposal based on billing plan start date. If you are going for billing plan, this is only applicable if a particular item category is relevant for billing plan. Okay, so if this item category WVN has a billing plan activated, in that case only you will go with option B, in which based on the billing plan your dates will be started. The start date will be picked based on the billing plan start date. Okay, now how this WBN will know whether this is relevant to billing plan or not, that is, if you remember, I had shown you from the configuration. Let me go there, SPRO IMG, sales and distribution, sales documents, these are the items, and these are the item categories. Let's go through this. WVN. Can you see this? 02. What do you mean by 02? 02 means this is periodic billing, but this billing plan type will only come if you are selecting the billing relevance as billing plan. So if you see this I, this is order relevant billing and it is based on the billing plan. And that is the reason billing plan is coming into the picture whenever we are using item category WVN. Okay, let me go back here now. So revenue distribution, how it will be done, whether it is a linearly distributed or it is related to billing plan, maybe this we will see later on in detail. But if it is blank, then definitely the distribution will be equal. It will be linear distribution. So whatever is available for a particular year, it will be divided by 12 and accordingly the amount will be distributed. Now coming to Ramakrishna's question, where exactly this particular thing is maintained, billing plan type 02. Let me go to billing plan type configuration. I think the default thing is maintained over there.
This conference will now be recorded.
Krishna, I'm already recording, so even if you don't record, that is fine.
Okay, sir.
Okay, let me check this. Where exactly this is maintained, I'm not sure at this point of time, but yes, this can be defaulted and this can be different for different item categories. So maybe in tomorrow's session, I will confirm on this, where exactly this is maintained. Okay, any questions till now? Okay, now let me, yes, Ramakrishna.
I was disconnected suddenly for the last 5 minutes, so if we have some time, then we can include the configuration or I can see the recording there.
Okay, no problem. I was just doing the configuration. Ramakrishna, just mute yourself because there is some background noise. Yeah. So your question, from where exactly in the configuration this Z3 and Z4 is maintained, I'm not able to see in this configurations that we have seen till now, but I will come back to you on this tomorrow. But I was just explaining the configuration that we already seen in our last session, which means if I want to, first I shown you this one, yes. So based on the item category, how system is able to know whether this is relevant to revenue recognition or not, that is maintained here. And second, this is a place where we are maintaining whether this particular item category is relevant for billing plan or not. Okay, so only these two I explained in the meantime when you were getting some network issues. So yes, so we are just left with understanding where this Z3 is coming from. So I'll explain you tomorrow. Yes, Lokesh, any questions?
Yeah, Gaurav, what do you mean by the start date and end date 02 and 09? Is there any specific logic is behind on this?
You are saying this one?
Yeah.
Yeah, so question is from where this start date has been determined. Okay, how system has determined that my billing will start from 1st of July 2012 and it will end at 30th June 2013. So this can be either manually entered, okay, or it can be picked automatically from the contract. So you can see here, whenever we created the contract at the header level, we mentioned these dates, that the contract is starting from this date and ending at this date. And if we want the same to be copied into our billing plan, then we are going with this option. So you can see 02 means it is taking the contract start date and 09 means it is taking the contract end dates, which means the values in the start date and end date are coming from contract data.
Gaurav, for this Z3, can you press F1 so that we can go from configuration from F1?
Yes.
Try to go.
F4 or F1?
F1.
Okay. Yes.
Can we go to
No,
this,
configuration is not available from here. So that's exactly what I said you. There is a configuration, but instead of
from here we can go, I think. Go to X3, Z3 F1.
F1 again, okay.
3, 4, 5, 6, 7th icon.
4, 5, 6, 7, this one, customizing. Determining dates, purchasing, sales, billing.
Yeah.
Okay.
Yes.
And rule.
Yeah, you can come down.
Okay, Q1 and yeah, Z3 and Z4. No, but this is where you maintain what will happen. But how this Z3 is determined, whether it will be Z3 or Z4.
Oh, automatically.
Yeah, that will come in the item category, right? That will come in the settings of
Yeah,
the
that will be assigned automatically.
Yes, exactly.
If you want, automatically there will be assignment of item. Maybe assign billing plan.
Okay, let's see here. So item category WVN. Okay, this is only showing the information that we already know, but Z3 and Z4 is still not available here. Date categories, let's see. I'll see this last one, otherwise I'll come with the firm answer.
Yeah, no problem.
Yeah. So billing plan type, we are using as second one. No, even not here. Okay, I'll come back to you on that. Let me just come out of this now. Okay, so let's go to the next scenario now. I'll enter the fifth scenario here, and then we are ready for understanding what are the challenges in the current SAP SD revenue recognition functionality, because of which there are some new rules created from IFRS 15, and these new rules, why they are not compatible with the existing SD revenue recognition functionality, because of which SAP came up with SAP RAR. Okay, so let's talk about the fifth scenario first. Now, whatever scenarios we have seen till now, they were all related to the periodic revenue recognition, right? So we created the contract is valid for 1 year, and then we distributed the equal amount over the periods, okay, over the 12 periods. But now let's say it is not periodic. It depends upon percentage completion. If you remember, I told you earlier also, percentage completion method. Okay, so which means the contract is created. Okay, but it is not necessary that every monthly we will be booking the same amount. It depends upon how much work we completed. Okay, so it may happen that you are booking the revenue of 10% in the first month. In the second month, it is only 6%. In the third month, again, you catch up the speed and you are recognizing 15%. So it depends upon how much work you are completing for a particular project. Okay, and normally this percentage completion method is tightly integrated with project systems. Okay, so there is a, you must be knowing there is a module in SAP called as project systems. So what you do is whenever, let's take an example, it will be better. So let's say you got a project in which you need to complete the construction of the building. Okay, and you realized that the plan time for this construction will be 1 year. Okay, and at the end of 1 year you are expecting that this building will be completed. So in order to book the revenue for the for this particular construction, every monthly you will check how much percentage of building construction has been completed. So let me enter these values here. So let's say at the end of month 1 you completed, if I exactly divide this amount, so which will come to 100 divided by, let's say you are able to complete in 10 months instead of 12 months, 10 months. So it will be easier for us to calculate. So there are M1, M2, M3, M4, 5. Let me copy this. So 6, 7, 8, 9 and 10. Okay, so at the end of every month you realized that only 8% was completed. At the end of second month, 11%. So consolidated or cumulative is 19%. At the end of, let me enter the cumulative. So 19, here you completed 25, here you completed 38, 42, 50, 63, 78, 91, and finally 10th month you completed entire 100%. So what will happen is, in this particular case, revenue will be recognized, and normally if I go with percentage completion method, even billing is monthly and billing is dependent upon the revenue recognized. Okay, which means based on how much percentage you completed, first you will recognize the revenue, which means you will book revenue credit and unbilled receivables account debit, and immediately you will create a billing to the customer for the completed percentage, which means immediately unbilled receivables will be cleared and the actual customer account will be debited. Okay, so it depends upon the billing cycle, forget about that, but this is important. So the question is, in case of periodic, system was automatically calculating how much should be the revenue for each month, because it was just the calculation divided by 12. But here, how the system will know that how much work you actually completed? In order for system to know how much work is completed, you need to have some setup in project system. Normally we use project system. Okay, so we will create a project in the project system module, and based on whatever activities you completed in the project, system will automatically fetch the data from project system into SD, and it will know, okay, whether the 8% has been completed or 19% has been completed. And this transfer of data from PS to SD is done via result key. Okay, so what is the purpose of result key? To calculate the percentage completion. And how this result key work, you can define your logics. Okay, so I'll give you two examples. How system will know whether it is 8% or 19%? It can be based on planned cost. Okay, I'll give you this both examples. So method 1 is planned cost versus actual cost. Okay, so total planned cost of project, it's equal to 1000 USD. So at the end of M1, 800 or I think 80, yes, 80 USD has been already incurred. Actual cost at the end of month 1 is 80 USD. So what will happen? Automatically system will divide this 80 by 1000 and it will realize that okay, 8% work has been completed. Okay, so this is a method which is based on planned cost versus actual cost. There can be also method 2 which is based on time. So method 2 which is based on time. So planned time vis-a-vis actual time. Now this time normally should not be in terms of months, because if it is in the months then obviously it will be divided into 12. So this time normally is based on hours. So total planned hours of the project, let's say, is 1000 man hours. Okay, and at the end of M1 you realized that 80 hours work has been already booked on this particular project. So based on that, system will determine that yes, 8% work has been completed. Okay, so in short, these calculations are based on result key, and this result key is assigned to the project definition in PS. So you create a project, you assign the result key, at the end of the month you calculate how much percentage has been completed based on the method that you defined in the result key, and whatever calculation has been done here, once project system has determined that 8% work has been completed, this 8% has to be transferred as a value to sales and distribution, based on which the revenue recognition will be performed in the normal revenue recognition functionality. Okay, so this percentage completion normally it is integrated with project system. Okay, so I don't have any example to show you now in the existing functionality, but I will definitely show you this one in RAR. Okay, so in short, now I hope you understood what is the purpose of revenue recognition functionality. So whenever you are booking the revenue at the time of billing, you don't need any kind of revenue recognition tool to identify what will be the revenue for my period. Okay, but in the case when there is a difference, when you are booking the billing and your revenue recognition at different stages, okay, different time intervals, in that case you need a revenue recognition functionality. So one is this time-based revenue, which means you divide the entire contract period into multiple accounting periods and book the revenue. Second is you divide the contract into percentage completion, which means you define based on the percentage completion you are going to book the revenue. Okay, billing, again, if you are doing the billing first and then the revenue, then that amount of revenue will be booked under deferred revenue account. If you are booking the revenue before billing, then that amount will not go to the customer account till the time you are not creating the billing. It will lie in unbilled receivable account. Okay, just one more thing in the configuration. I think I have not told this till now. I already shown you where the deferred revenue account is set up. So I'll go to IMG again, sales and distribution, same folder that we seen, basic functions, account assignment and costing, revenue recognition, and this one we already seen. So which item category is relevant for revenue recognition? So if we go for WVN, we know that this is relevant for revenue recognition functionality. Okay, so this is a place where we specify it. If you go with the standard items which we normally use in any sales order, like TAN, which is a normal standard item category, you can see it is a standard item. You will not find revenue recognition at all. This means the revenue and billing are done at the same time. There is no time difference between revenue recognition and creation of billing document. Okay, so if you go back once again and let's talk about these two things. Maintain account determination. So there are two steps here. As I told you, in this entire scenario, we seen there are two important accounts, deferred revenue account and unbilled receivable account. If you have question in the mind, what about these accounts? Where exactly the customer account will come into the picture? Where exactly this customer account is maintained and where exactly this revenue account is maintained? So customer account always comes from the customer master data. There is no separate configuration to define the customer account. The GL account which will be booked at the time of billing, this GL account will get picked from customer master. In the customer master under financial role, there is a field called as reconciliation account. So that reconciliation account will be picked automatically. There is no configuration to determine this customer account. So let's talk about these three accounts now. Where exactly this revenue account will come into the picture, how the deferred revenue will be determined, and finally how this unbilled receivable account is determined. So all these three things are determined or can be determined using these two options. So let's go for the first one. Assign GL accounts. Yes.
Yeah, sorry, Gaurav. Can you please give example of scenario 5, because I may not be able to figure out the difference between SD, how revenue is recognized in SD and RAR. So it will be great if you can please.
Yeah. I'll make sure. Sure. I'll do that.
Yeah.
Okay. So now, once we are here, in this one, you can determine, this is VKOA. If you are already coming from SD or FI background, you must be knowing this transaction, VKOA, which is the integration of SD with FI, which means whenever you book any transaction, whenever you are creating the billing document in sales and distribution, system automatically generates the accounting entry, customer account debit. As I told you, customer account debit will come from the reconciliation account maintained in the master data of the customer to a revenue account. And this revenue account is maintained in this configuration. Okay, so you can determine the revenue account based on multiple combinations. So you can go with the first combination where you will say, okay, if the customer group is this, material group is this, account key is this, then I want this particular revenue account. In the second one, you will say, okay, I don't need to worry about material group. I can just take these two things, customer account group and account key, accordingly select the revenue account. Third one, you are not worried about what is the customer group. You are just worried about material group and account key. Okay, so what system does is, it will follow this particular sequence. It will go in this configuration first. It will check if these two accounts are provided or not. If they are provided, then it will stop here itself. It will determine the GL account. If not, it will go to the next combination. If not, it will go to the third. If not, it will go to the fourth. And finally, if nothing is available here, it will go here. And even if it is not available here, then definitely system will throw error that revenue account has not been maintained for this combination, for this particular material, right? So any transaction or any sequence, when you double click on any particular activity here, it will ask you for two accounts, GL account and provision account. This GL account is revenue account and this provision account is deferred revenue account. Okay, so for example, in our combination, let me click on position. See, application will be always V. Let's see what is V. Sorry, I was looking for description, but it is not available. Okay, so let's go with V. Condition type is always going to be KOFI. Chart of accounts, it depends upon your enterprise structure. So if I go for OBY6, OBY6 is a transaction for global parameters of company code. So our company code that we are continuously using is 3000. You can see this company code 3000 is assigned to chart of account CAUS. So here we have to specify application V, condition type KOFI, chart of account CAUS. Sales organization is 3000. Okay, and if you want to provide this account assignment group, material account group, account key, then it will come. But normally for revenue, the account key is ERL. So if you see this ERL, what is happening? Revenue account can be determined from here itself, but deferred revenue account is not defined here for ERL. Okay, these are different account keys based on your different conditions. The normal revenue is booked in ERL. So what is happening is normal revenue account combination is maintained here, but if we talk about the deferred revenue account, that is not maintained here. So in that case, whenever a system is looking for revenue account, it will pick it from here. It will not go to the next combination. But if it is looking for deferred revenue account, definitely in this line, it will not be able to identify, and that is the reason it has to go for the next combination. So again, in the next combination, he will enter the same things. Only thing is there will be one lesser field here. There will not be any material group. So V, COFI, chart of account CAUS, sales organization 3000. And here also, system is not able to determine the deferred revenue account. So revenue account is available, but there is no deferred revenue account. Again, it will go for the next combination. So again, this V, chart of account CAUS, and this 3000. So again, for ERL, no deferred revenue account. Go to the next combination. Here also there is no deferred revenue account. And the last one is this one. So if there is no revenue account defined here, if you try to create a new document, it is definitely going to give you the error. Okay, but here you can see this is the deferred revenue account which is already defined. Okay, so if I remove this, definitely system will not be able to understand what will be the deferred account. Okay, so what you understood in this configuration is from where the revenue account will come into the picture, from where the deferred revenue account will come into the picture. So customer, you already understood, customer is coming from the customer master data. Now only the remaining GL account that will be required in case of revenue recognition is unbilled receivables, and that is not defined here. Unbilled receivables you cannot define using this first option. There is a second activity assign accounts for unbilled receivables and cost. So if you double click on this, this is where you are going to determine the revenue account. So you can see there are not much of combinations here. So application is V, chart of account is CAUS. This is the unbilled receivable account and it is coming based on the reconciliation account. What is the reconciliation account? Reconciliation account is nothing but customer account. Okay, as I told you, in customer master, there is a GL account assigned. So if I talk about this particular customer, which is mentioned in this particular contract, okay, this is the sold to party. Okay, let me go for XT or FD03 for 3800 and company code 3000. Okay, if I go to company code information, this is the reconciliation account. Okay, so what we are telling the system is, if the reconciliation account is this, then instead of booking the amount here, book in unbilled receivables till the time billing is not completed. Okay, so this is the place from where the fourth GL account is coming into the picture. Okay, now I hope whatever scenarios we have seen till now, apart from this PS scenario, all the scenarios which are coming from SD perspective, you know where exactly the configuration is maintained. How system is determining the item category of a particular item, how based on the item category system is determining whether it is relevant to the periodic based billing or there is a billing plan or not. All those things are coming from there. And finally, whenever you are trying to post the documents, either the billing document or the revenue account document, how system is determining the GL accounts. Clear on this? Now let me once again, as Rohit said, he wants some more clarification on this. So see, currently all other scenarios I shown you in the system, and that is the reason I think you are more comfortable. This scenario is not present in the system, and it is also not very straightforward to create this scenario, because I need to first create the PS structure, I need to create some project, and accordingly I need to generate the cost for this percentage completion. I need to execute the settlement, which means whatever amount will be determined here, it will go back and hit into the SD module. Okay, so again I will just explain you what exactly is the purpose of this, but you will get a clearer picture when we will see this particular scenario practically in SAP RAR. Okay, but if your question is how this is different in SAP RAR, I will try to clarify that now. Okay, so just quick recap in 5 minutes. What is this fifth scenario? See, in the fifth scenario, we are saying normally whenever you are creating the billing and your revenue recognition, if there is no time difference between them, then there is no question of having the separate billing document and revenue recognition. At the same time, whenever you create a billing document, revenue is booked. Okay, but in the scenarios when it is not true, because you are booking the revenue in advance, or you are creating the billing document in advance for multiple months, or your revenue recognition is monthly but you are creating the billing document at the end of quarter or at the end of year. In that case, these two activities have to be carried out separately. Okay, so the first option is, if you are carrying out these activities separately, you divide the entire contract amount into equal number of installments. So if you have 12 installments, you will divide it by 12. If you have 4 installments, you will divide it by 4. Okay, so that will be the calculated amount. That will be the amount which is getting divided by the contract term. But if it is service based, which means your revenue is not dependent on how many months you completed. Your revenue is dependent on how much work you have completed. Okay, so in that case, how will you track the work? How much work you completed? There needs to be some mechanism in the system where this work is being calculated. And normally, in order to calculate this kind of work, we use PS system, project systems. Okay, in the project system, as soon as the sales order is created, we will also create a corresponding project. Okay, and we will set up the system in such a way that whenever we are doing any particular activity in the project system, at the month end, it is reporting back to SD, telling the SD what has been completed till now. Okay, so what will happen? In order to set up those in the project system, we need to maintain a lot of configurations, the RA keys and all. And based on the RA keys, we can define whether we want to implement method 1 or method 2. Based on that, system will estimate or determine what is the total percentage completed for a particular project. Accordingly, it will send the data back to SD, and based on that, revenue recognition functionality will determine this as percentage complete, and it will recognize that particular revenue. If the billing is already completed, it will go for revenue to deferred revenue account. If the billing is not completed, it will go from revenue to unbilled receivable account based on the combination that we just maintained. Okay, now if your question is how this is different in RAR, no need to worry at this point of time, because even we have not discussed how these transactions are different in RAR. So my focus currently is to make you understand what are the different kind of scenarios that you execute during the revenue recognition, how the scenarios were handled in SAP SD revenue recognition. Once you understand that, my next thing which I'm going to start now, we have some time now, 10-15 minutes. So I will start with giving you the scenarios where you will understand that yes, these kind of scenarios cannot be configured or achieved using SD revenue recognition. And then tomorrow I will give you the complete description of how these things will be handled in SAP RAR. So tomorrow will be just kind of overview to SAP RAR without going into much of practicals. We will try to understand what needs to be done, what are the different steps to recognize the revenue, and then for each and every step, we need to understand what configuration will be used, what master data will be used, and what transactions will be used. Okay, Rohit, so is this sufficient for this particular scenario now, percentage completion?
Yeah, thanks Gaurav. Thank you.
Okay, so any questions in understanding of whatever we have discussed till now, so that I can go to the next part now? Okay, if not, let me go to the next thing. Now I'll give you 1 or 2 scenarios and you need to tell me what do you think how this will be handled in revenue recognition. Okay, so these are practical scenarios now, industry specific scenarios. Okay, so let's take the telecommunication industry. Okay, transaction number 1. Company sells mobile device at $5,000. Can you tell me the revenue treatment of this? Whether this revenue will be
Yes, this will be upfront revenue recognition of $5,000.
So you mean to say scenario number, if I talk from these scenarios,
So
1,
it
2,
will
3,
be
4, 5, which one is applicable?
revenue scenario 4, I think.
Scenario 4, yes. Revenue at the time of
Yes.
billing. So what will happen here is revenue will be booked at the time of billing. No time difference. Okay, and hence no need of revenue recognition technique. Okay, second question is what will be the accounting entry? So company sells mobile device at $5,000 to customer A.
So it will be customer A debit and sales credit.
Customer A will be debit. Just mute yourself. Yep. Customer A will be debit and actual revenue account will be credit. Okay. From where the system will pick the customer GL account? From the customer master. From where the system will pick the revenue account, it will be from VKOA settings, which we just seen. Okay, so very straightforward. Let's say the same company. Okay, and let's talk about company sales mobile device. Let me enter in the bracket model number 1, 2, 3, 4, 5. Okay, this is just for example because it will help in our next scenario.
Gaurav, I just have a question on this one.
Yeah.
Why should we book revenue only at the time of billing? What if we are booking the revenue at the time of sales order itself?
No, as I told you, whenever we are talking about goods. Ramakrishna, please mute yourself. Yeah. Whenever we are talking about the goods, whenever we are providing the goods to the customer, the minimum requirement to recognize the revenue is transfer of goods has been, or the ownership of the goods has been transferred to the customer. Okay, and that is the reason if you go through the normal sales order process, you create a sales order, you create a delivery for that sales order, and then you create a billing, and billing is only done after the delivery. So normally this kind of scenario will follow delivery based revenue recognition, which means your revenue will be only recognized when the delivery has been completed. Clear on this?
Yeah, thanks.
So in short, there is no scenario in SAP system where the revenue will be booked at the time of sales order itself. Definitely not. You have to, revenue will be only booked when the service
we are
has
doing it, Gaurav. No, we are doing it for a software company when they sell the license as well as contract. The license amount is booked immediately at the time of sales order, and at that time it sits in the unbilled revenue. And once I create the invoice, it goes to the billed revenue. So we have a mechanism where we really book the revenue at the sales order level. So maybe it's a unique case. You can go ahead, and I can discuss offline if any.
Okay, can you mute yourself?
Yeah, sure.
Yeah. See, you are saying when you book the sales order, at that time itself the revenue is booked. I think there is definitely something missing here. You might be saying that you created some kind of scenario in which as soon as you create a sales order, the revenue is booked at least for the current month. That is possible. But if you are talking about the revenue recognition for the entire term of that license, definitely not, because that is against the rules then, right? Because we are discussing same thing, that revenue will be recognized only when the services has been rendered or the goods have been delivered to the customer. So when you create a sales order, it just means that yes, we need to deliver this good, or we need to render this particular service. But till the time we are not doing that, actually it is not supposed to, we are not supposed to book the revenue. Okay, so just check why exactly you are doing that. It might be only for the current month, because whenever you are creating the sales order, it may be possible that anyways you need to book the revenue at the end of the month. So that can be booked because it will show in the reporting of your current month only. Okay, so we'll talk about that. So let's go to the next one now. Next one is same company. Voice plan for $300 per month. Okay, so company is selling the voice plan. Let's say the voice plan, again voice plan number is 123. What will be the treatment, revenue treatment for this? And let's say I'm adding to this billing done at the beginning of period. So every period the billing is done. Billing is done every monthly. Normally, whenever you go for any data plans, any mobile plans, you normally get a bill per month, and this bill is normally advance bill, which means as soon as the month is started, they will send you the bill to enjoy the service for next 1 month. What will happen in that case?
Even in this case, it will be same as number one, because we are billing it every month, and it's every month. There's no contract. So it should be like customer A debit, revenue credit.
Okay. So here there are two options. Okay, I'll not say you are wrong, you are also correct, because anyways if I'm booking the revenue at the beginning of the month, that is the revenue that I generated in this month itself. Even though I'm liable to book it on the 30th of month, but still the revenue belongs to that particular month, right? So I can go for
Correct.
customer debit to revenue credit, or I can also go for customer debit to deferred revenue on the 1st of the month, and at the 30th of month again I will book deferred revenue to revenue. So both the options are open because all the transactions are happening in the same period. So I'll go with the same one as you said.
But Gaurav, you're not specified any start date and end date, right? So it is an open contract only, right? So how
No,
you
normally,
can say?
see, normally when we say monthly, it is from the start of the month to the end of the month. Because I'm saying this is for the particular period, or single period, per month.
See, so we having, say in the telecommunication, we having a postpaid and prepaid. So we will treat postpaid in a different format and prepaid as a different format. If we go for prepaid, either the customer can recharge the revenue for the particular month or may not. Both are possible.
Right.
But in prepaid, definitely the company will recognize the revenue. So
yes,
if the company recognizes the revenue, definitely there will be a start date and end date.
Okay, so let's do this as prepaid to avoid the confusion. This is prepaid voice plan, for which you getting the bill first, you are paying the amount, and then you are enjoying the service for next 1 month. Yeah, you are right. If you are going with postpaid, then definitely the billing cannot be done first. Billing will be done based on how much utilization you have done, or how much consumption have you done from the voice plan. Okay, so let's keep it simple. This is a prepaid. Now let's come to the third scenario. Okay, I'm keeping it simple. Company sales, or company has came with promotional option. What is the promotion? If you buy plan, voice plan 1, 2, 3 for next 1 year, or let's say next 2 years, whatever it is, get mobile device at only $1. Okay, so if you buy the voice plan 1 to 3 for next 2 years, mobile device will be provided to you at only $1. Okay, again, this is just an example. So what do you think? In this case, definitely when you create a sales contract, how many lines will be there? Let's say the start date is 1st of July 2018 and end date is 30th of June 2020, right? The plan is valid for next 2 years. So sales contract will be created from 1st of July to 30th of June 2020. Okay, and let's say the billing is done at the beginning of the period, at the beginning of the contract. So billing date 1st July 2018. There is no billing plan. Single bill for entire 2 years. Okay, and definitely in the sales contract there will be item number 1, which is nothing but mobile device at $1, and item 2, which will be voice plan at, if you calculate this, 7,200, right? So this will be $7,200. Okay, so there are 2 items. What do you think? What will be the treatment of item number 1? Are you there?
Item number 1 is like we are selling the mobile, so we should bill it immediately for that.
Okay, so item number 1
Yes.
follow scenario 4 if you go up, which means a revenue at the time of billing. Okay, but how much revenue? How much revenue will be booked?
$1.
$1, is it correct? $1 or
Yes.
$5,000?
No, we talking about item number 1, so it should be $1 only, right?
Okay, so this mobile device we are giving on $1 because customer is purchasing the voice plan for 7,200. But otherwise, if this item is sold, it is being sold at $5,000. Okay, so what do you think? We'll be recognizing the revenue only $1, or we should recognize the revenue as $5,000?
See, anyhow, that $5,000 has been included in a voice plan, $7,000. So no customer will pay voice plan for 2 years for $7,200. Anyhow, the device amount is already included in item 2.
Okay.
So again, we bill those $5,000 in item number 1. The customer will not accept on that.
Right.
Maybe at interim purpose.
It's only conditional, right?
Yeah, at
In
least,
case you discontinue the contract, you get all the 5,000 back from the customer.
Mm-hmm.
In case
Okay.
he discontinues the contract at some time, he has to pay the 5,000. So it's not that $1 revenue.
Okay.
5,000 and in some temporary account, And once he completes the contract, then it should be written off from there.
See, on the customer point of view, we need to bill $1. But in the internal point of view, if we want to show revenue in a different way, then the item number 1 can be $5,000. So it's
Okay.
only an internal purpose, not for a customer level.
Okay. So anybody who has worked on SD revenue recognition in SAP ECC? Anyone who already has some experience
Yeah.
into? Yeah. So
I
what?
work with the
Yeah. What do you think? Then in that case, if I'm forget about the rules, forget about the treatment of the accounts, forget about IFRS gap. If I'm creating this sales order or if I'm creating this sales contract in the standard SAP system, how much revenue will be booked?
So the revenue will be booked 7,200 as a deferred revenue, no doubt on that.
No. I'm talking about line number 1.
Line number 1 for me, we need to use a different item category, a normal item category, and it will be a customer A debit revenue credit.
No. Accounting entries I'm not asking. I'm asking you how much revenue, which amount?
It will be $1.
$1.
Yes. That is exactly what I want to hear. So what happens in current SD revenue recognition or whatever the rules coming from GAAP and IFRS currently, I'm not talking about IFRS 15. It is based on at what price you are selling a particular material. Okay, but as we discussed, and this was a good discussion, Lokesh and who was the other one? Yeah, it was a good discussion. So what we understood is, although we are booking this as $1, but this is not giving us right picture because we are selling the voice plan at 7,200 and definitely in the company who is selling this data plan, definitely they might have some cost associated with the mobile device. So maybe they divided internally into 4,200 and 3,000. Definitely the cost is not $1, right? They will incur a huge loss if they go for $1 billing for a particular mobile device. So whatever is the logic, they determined, maybe 4,200 as a service, 3,000 as a device, or maybe 5,000 as a service and 2,200 as a device, whatever it is. So there has to be some calculation which they have performed internally, and based on that they derived the total price of the contract, not the price of this first item, the overall price of the contract. So currently if you go with normal SD revenue recognition or if you go with normal GAAPs and IFRS, it was perfectly fine to book this amount as $1. Okay, because you have two items in the sales contract. The first item value you already mentioned that it is only $1, so $1 can be booked as the revenue. Okay, but now as far as IFRS 15, in IFRS 15 the revenue has to be booked based on standalone selling price. Okay, so this terminology, standalone selling price, is making the lot of changes. What is standalone selling price? So I'm selling this mobile device at only $1, but what is actual standalone selling price of this mobile device? If I'm selling only mobile device, how much will I get? I will get $5,000. So this is the standalone selling price of this mobile. And based on this standalone selling price, we need to find out the proportionate value. Okay, I'll tell you what is proportionate value, what is standalone selling price. We will continue this same example in tomorrow's session to understand how IFRS 15 is different. Okay, so now the grounds are clear. I think all of you are able to understand that if I'm going with this combination of two lines at the same time, how it will impact the rules which are provided by IFRS 15. So I cannot just go ahead and book this $1 as my revenue, which is completely wrong. It is not complying to IFRS 15. IFRS 15 has some new requirements in which you have to book the billing as per the proportionate value. So what exactly is proportionate value? How to determine the standalone selling price? Because When we create a sales contract, are we entering the standalone selling price? No, because in the contract, whatever we agreed only for $1. So we are just providing $1 of the revenue. But now, if I look at IFRS 15, we need to have the standalone selling price. We need to calculate the proportionate value. And finally, based on this proportionate value, the revenue will be recognized at the month end. Okay, so that complete cycle we will discuss in tomorrow's session. I think we are already late today. So can we close for
Gaurav,
today? Yes.
Yeah. Gaurav, actually in revenue recognition in the current cases here, I don't think we cannot differentiate mobile device value and voice plan one.
Exactly.
If you're booking item 2 as a 7,200 means the contract value will be considered 7,200 and it will be recognized based on your billing plan.
Right.
But I don't think
that is the challenge with existing SD revenue recognition, and that is the reason the compliance that we need to follow from IFRS 15 perspective, those cannot be achieved using the current SD revenue recognition functionality. And that is the reason we need to understand how RAR is different and how RAR will help us in calculating all these things and automatically posting into the revenue accounts and complying with IFRS 15 norms.
this is a good example actually, where we can differentiate mobile device separately and the voice plan.
Yes. So different industries have this different industries have different examples. So this is the example that I gave you for telecommunication industry. So tomorrow when I'll be giving the overview of RAR to you or overview of IFRS 15 to you, we will talk about 3-4 industries and how this clubbing of material as well as service will impact the way in which the revenue is recognized.
Okay.
Gaurav, this is Patel.
Yes.
Maybe more very SD question, but when the actual price of the mobile device is 5,000, right?
Mm-hmm.
When we put along with this contract, how the price goes to $1? Basically, they do price override or just they give a discount for that amount. How? I'm just asking pricing there.
No, this is see, first of all, the pricing can be calculated by default. Whatever pricing you entered for the particular material. Let's say when you enter that material by default, it will show you 5,000 because that is coming from the pricing. But you can definitely go ahead in the sales contract and change that 5,000 to 1 because that is what you agreed with the customer.
Yes. So my question is more towards like because it's a promotion.
Mm-hmm.
Because this is a promotion going on, we literally not go and change every contract we enter. So is there a way, okay, the promotion is going on so that it happens automatic? That is possible?
We have to check. Let me check on this. Whether is it possible to automatically specify that yes, this is based on the promotion and it should be booked at 1.
Yeah, okay. But that's what I said. It's not. It's more. Yes, just suddenly it came up. I want to ask you.
No problem. We'll talk about all these concepts in detail.
Perfect. Thank you.
Okay. Thank you all. Bye.
Thanks so much. Bye.